Hello and welcome to the KE Report. I'm your host, Shad Markowitz, and I'm speaking today with Peter Krauth. He is a author of the book, The Great Silver Bull, partner in crime with Glenn Preston, a friend of the show over at the Resource Maven under that banner, and he writes one of the only silver newsletters, the Silver Stock Investor, that I'm aware of on the market. And since he focuses on all things silver, especially with the move we've seen up recently, wanted to get Peter on the show to introduce him to the KE Report audience. And Peter, it's great to have you on the show, especially considering the timing with silver finally starting to break out a little bit. I guess let's maybe start there, just on the price breakout in silver. What do you think's behind it? What do you think's driving it? Why did silver finally wake up?
Well, it's excellent timing, and thanks for having me, Shad. Yeah, I mean, let's jump right into it. So, what is happening? I think really, as is often the case, silver is following gold. Gold has had a tremendous run over the last several months. I'm going to say about 4 months at least or so, hitting new all-time highs. Very impressive. In the US dollar, touched $2,300 just sort of a day or so ago. And I was at a conference a couple of weeks back. I was asked if I thought this was, we were hitting all-time highs already then in gold, around 2150 or so US. And I was asked if I thought this was going to be, a real breakout that would continue. And the last holdout was actually in major currencies was the Swiss franc. And I was actually at a conference in Zurich. So it was appropriate that the gold price had just broken out in the last holdout, major currency being the Swiss franc. So now I do believe that gold is in a new extended rally. Silver is following. It always does seem to lag a bit behind and then starts to catch up, tends to actually outpace. It has proven itself over time to outpace gold when it gets going in bull runs. I think that we're going to see that this time as well. It's going to take some time for it to play out, but the action of the last sort of week or two has been tremendous, and the last few days or so has been just explosive in silver stocks. So it's an exciting time, and there's still plenty of time for people to get on board.
Yeah, Peter, it's interesting because silver does typically lag gold on some of these moves in the beginning, and then as we know, it blasts up and it does more than play catch up. Even recently, it's been outperforming gold. I put up a chart just to folks yesterday showing that SILJ actually has outperformed GDX, GDXJ, and SIL, so the silver juniors, since the February bottom. I think it was February 28th to present, so about a little bit more than a month. You've started to see that outperformance in silver and the silver stocks, which is really what you want to see in a healthy bull market. What do you think is driving it? Because we always hear silver is a precious metal, but it's also an industrial metal. It has that manufacturing focus. What do you think is driving the move higher recently in silver?
So you're right. It is very much an industrial metal, much more so than gold is. Today, about 60% of silver actually goes to industrial applications. And I think that it's a combination of both its industrial requirements and its investment, I guess its investment characteristics. So it's been money for thousands of years. I go into that in some considerable detail in the book. And as I say, I think it's really both right now that's making silver move. We've been in structural deficits in the silver market for the last 4 years. The Silver Institute is forecasting deficits for the next several years. And people have been asking me, why is silver, up until recently at least, why is silver not moving if there are these structural deficits, if there's such demand and the demand keeps growing? It just didn't make sense. And I had this sneaking suspicion that the big consumers of silver were getting their silver somewhere. That was not necessarily affecting the regular supply. So the regular supply is mine supply plus recycling. And then you've got what I call secondary inventories or secondary supplies. And that's what sits on futures exchanges and sits in ETFs. So you've also got, I guess, what you'd call investment silver, that people who buy and stack silver, bars, coins, etc., also accumulate over time. But it's easier to track what's happening in the futures markets and in the ETFs. And so with this, suspicion in terms of what had been happening, I started to go hunting and looking for charts and data that would help me prove, I guess, the theory or the thesis that I had that the large consumers were accessing this secondary silver. So I found charts, I found data on the COMEX, on the LBMA, on the Shanghai, and each and every one of those three major precious metals exchanges, markets, have seen their overall silver inventories drop at least 30 to 40% over the last 3 years. And silver ETFs globally, the same thing, about 30 to 40%. And if you look at what is called registered silver on these futures exchanges, now the registered portion of their silver inventories is what silver is actually available for delivery. It's not the overall silver inventory. And those silver inventories in the registered ones on a couple of these exchanges are down more like 70% over the last 3 years. So my theory is that you have large consumers, large industrial consumers of silver who are buying long dated contracts, buying silver ETFs that are backed by silver, and then asking for the silver. They're waiting for those futures contracts to come to maturity, and they go to the exchange and say, all right, I have this contract. Now it's matured. I'd like delivery. Here's the address. Please send it to, to that address. They're buying silver ETFs. Most, not all, but most allow for the exchange of units in the ETF for the physical silver that backs the ETF. If you own enough of those units, you can go to the administrator and say, I'd like the silver. And so I believe that that's what's been happening. I came up with another interesting chart that looked at the SLV, which is the world's largest silver ETF. It's about $10 billion in market cap. It has, I think, over 400 million ounces of silver. It's seen its silver holdings drop dramatically, like all the others over the last several years. And you've never had and the SLV has existed since 2006. So it was the original silver ETF. During the financial crisis, 2008, 2009, during the run up in silver in 2011, both of those periods, you had explosive moves in the silver price. During both of those periods, you had, despite corrections that came right after those run-ups, so the silver price came down considerably after those big run-ups. You had, in the first instance during the financial crisis, despite the drop in the silver price, you had an increase in silver holdings at the SLV ETF. During the correction after the run-up in 2011 to $49 in silver, and then that subsequent correction over the next couple of years, you had a sideways movement in the silver holdings. So you did not have a drop and a sustained drop in silver holdings by SLV. However, in the last 3 years, despite the silver price until recently moving sideways, staying in a relatively tight range, you have had silver holdings drop at the SLV ETF. Never before happened. I believe, again, clearly to me at least suggests that large consumers are buying the ETF, standing for delivery, and draining these markets. So, I think really, really interesting things are happening in this side of the market, and we could see that actually reverse sometime soon, especially with the ETFs. They will still need to, I think, access these markets to drain and get the physical silver. But there's been a small uptick in silver holdings in the ETFs. It's going to be very interesting to see how this continues to play out.
Yeah, Peter, it is interesting to look at what's happening with the ETF inflows and outflows. If people are standing for delivery and taking the physical metal from ETFs or from futures contracts on the COMEX or from other exchanges and getting the physical delivery, we hear all the time from certain outlets that there's going to be a big silver squeeze or a big shortage. As you remember, a couple of years ago, there was the big silver squeeze movement. And the idea being that there just wasn't as much above ground supply as people thought, and that if a lot of those sources were tapped, that it would eventually affect the price because there would just be a limitation on the amount of physical silver. We've also had people that have come on the show and kind of shot that idea down and said there's plenty of silver above ground. There's plenty of silver for these ETFs or for the different warehouses to stock back up again. What is your thought on that debate? Is there enough silver? Are we going to see a shortage in the near term? Could the silver market actually get squeezed?
So I believe it can. It's true that it's difficult, if not impossible, to get a really good handle on just how much, sort of secondary supplies there are out there. We can tell what the futures exchanges, we can tell what the ETFs have. But then, there are private holdings, private inventories. There are holdings by individuals that are maybe small amounts, but if the silver price gets high enough, I would not be surprised that they will start to sell back to the market. That doesn't mean there won't be ready buyers for that silver at the same time. So I'm not convinced that supply coming from individual or private owners will impact supply all that much. As I say, I think that with a higher price, gold and silver are different from a lot of other markets. When the price runs up, people get more interested and tend to want to buy even more than they did previously. So they don't tend to buy when gold and silver are cheap and selling at relative discounts or considered undervalued. They seem to wait until it runs up. I don't think it's going to be any different this next time around. And so I think that you have to go by what data you do have. And my sense of it is that we have maybe 18, 24 months at best before we do run out of the bulk of these secondary supplies. It's interesting, there was a recent article where TD Commodities were interviewed and gave the exact same expectation timeline. They think that we're somewhere around maybe 12 to 24 months and that these secondary supplies will run out. I think that what is also telling is how industry research seems to be just too conservative. I'll give you some really interesting statistics. So forecasts for 2023, it's easy to look back now and see how that turned out. Supply of silver. So when we talk about supply, again, mining plus recycling. Forecast was for supply to grow by 2%. They revised supply actually dropped by 2%. Industrial demand was forecast to grow by 4%. It was revised up 8%. Solar demand, which if anybody's following and watching silver, they've really got to pay attention to what's happening in solar. We can talk about that a little bit more after. But to get back to the point, solar demand has just been explosive. It's almost tripled in the last decade or so. And the forecast originally for 2023 was that solar would require 140 million ounces. It was revised up at 190 million ounces. The supply deficit for 2023 was forecast to be 142 million ounces. It was revised much higher at 194 million ounces. So if you look at and think about these numbers, I mean, silver's just in each way outpacing. Both demand is outpacing and supply is underperforming what expectations have been. And it does not look like, from most of the metrics that I follow, that is likely to change anytime soon. And so, I really think that the pace at which these secondary supplies are being soaked up is really underestimated. And there's this interesting anecdote I have from a mining executive from a few weeks back who produces a fair amount of silver. They sell about half their production to China and the other half to the West. Well, their Chinese buyers are telling them that they are prepared to pay for the silver 2 weeks before delivery. They're prepared to pay $3 over spot to get that silver. So there is extreme tightness in the market that is not, I guess, reflected and or reported regularly. But these are the kinds of things that, by being in the industry, talking to people who are on the front lines, you get a sense of really what's going on. And that certainly speaks to just how tight the market is.
Well, I appreciate you breaking down the supply demand side of it. And it sounds like, to your point, in those numbers, the demand is outpacing expectations and the supply is a little more crimped than many expected, which is a good scenario for any commodity. And I know that in other interviews, you've actually made the point that you see silver as the next uranium. That's the exact same thing we did see in uranium, where the secondary supplies dried up, where there was less supply than people anticipated, more demand than people anticipated. And look what happened to the uranium price and the uranium stocks over the last couple of years. So I do want to transition over into the beat up and beleaguered, but much loved on this site, silver stocks, Peter, because they have really, just been beaten down to a pulp
Yeah,
over the last couple of years. A little
no
bit
question.
of excitement recently. And like
Yeah.
I said, just since February and that bottom at the end of the month, they've outpaced the gold stocks and even some of the seniors. When you look at the broad universe of silver stocks, the producers, the developers, the explorers, what kind of companies really get your attention in the newsletter that you produce?
So, I mean, I cover the sector from A to Z. I talk about physical silver. I talk about some of the silver ETFs, both for physical silver as well as for the silver mining companies, and then everything from the large royalty and producers to mid tiers, developers, and juniors. So I really do cover the entire space. The only aspect I really don't deal with is silver futures, and that really is about it. So what is typical, and that's exactly what we've seen, is that it's larger players that get the biggest impact when these moves come. And we've seen huge moves in some of the larger players. I'm talking about companies like First Majestic, for example, Hecla Mining, Mag Silver, Gold Resources, just tremendous moves. Aya Gold and Silver is one that I recommended about just about a year ago. And it's already now that has been an exceptional company versus, I guess, the rest of the space. There are a few exceptions that outperform and do well. It has not moved quite as much as perhaps the others in the last few weeks, but it has actually outperformed over the last year. It's up 55% since I added it to the portfolio. So that and I believe there's a lot left in that company. They are operating out of Morocco. They have one of the few pure large silver mines in the world. They are in the process of ramping up their production from just under 2 million ounces to quadrupling it to 8 million ounces of silver per year. They have tremendous exploration projects that they are working on in the same sort of mountain range, the Atlas Mountains. It's really worth anyone who is interested in sort of a mid to larger silver producer to go and look at this in more detail. And then you've got companies who, as I say, in the developing stage or the juniors that have really performed well. I mean, some of the higher conviction names, I guess, would include companies like Suma Silver. They are neighbors to BlackRock in Nevada in the Tonopah district. They have a project that is basically the eastern half of Tonopah West, just the other side of the highway. They've been hitting some fantastic intercepts. They've been stepping out a number of kilometers from where historical drilling has taken place, making some fantastic long intercepts of really high grades. That has tremendous potential. A lot of blue sky. I think that there is tremendous scale at that project. They also have a project in New Mexico called Mogollon, and that is a historically high-grade vein system, large, very large vein system that has produced in the past. They are getting some fantastic intercepts there as well. These are names that I would encourage your followers to look at, do more research, dig into a little bit more, and decide for themselves how they feel about it. But these are all names that are in the portfolio that I certainly buy and follow closely as well.
Appreciate you sharing those. And yeah, we've had Galen from Sumo on the show before, and we have Andrew on from BlackRock regularly. It brings up a question in my mind about jurisdiction in silver, with so many concerns in Mexico about them stating, at least openly, that they want to ban open pit mining and they've made it more difficult for new exploration tenants to come online. A lot of people are looking around the globe at, well, where else is there silver? There's obviously a lot of silver in South America, but you do see silver in Nevada with the Tonopah area. You do see silver in the Golden Triangle. I'm thinking of something like Dolly Varden that has a lot of silver there. And then you also see stuff in the silver cobalt camp in Ontario. And you even brought up Morocco there. So when you look
Great.
around the globe, are there any jurisdictions that you like more than others or any that you're staying away from?
Well, I mean, like more than others, that you're right that it is quite difficult to find silver, especially primary silver mines. A quick sort of a little stat that is interesting for your listeners is that about only 25% of silver comes from primary silver mines. About 75%, three quarters of all silver is actually a byproduct of mining copper, gold, lead, and zinc, typically. So when the silver price moves, it does not mean that you're going to get much extra silver coming to market because the miners of those other metals, don't really care that much about the silver that they produce. It's an afterthought almost. They're happy to accept a higher price, but they will not make much, if any, effort to try and produce more silver. It's just not their focus. So that could exacerbate an even higher silver price because you get this rising price, you don't get a response from supply that just is, this vortex, this upper rising sort of trending vortex. In terms of places that I guess I'm somewhat more cautious about are going to be places like perhaps Chile, Peru, that have been not as conducive, not as friendly. It's true that Mexico has, at least in the last while, been a little bit more difficult to work. There is an election coming. There is some reasonable possibility for change. We can hope that they're going to become a little bit more mining friendly. Mining is just so important to Mexico. It's hard to imagine that they wouldn't sort of pivot back to being more pragmatic when it comes to that industry. Mexico is the world's largest silver producer, and so it's very important to their economy. I'm certainly watching that very closely. Other places that I'm somewhat more cautious about would include perhaps, say, Ecuador, Colombia, for example. And a place that I've warmed up to actually in the last couple of years has been Bolivia. My sense of it is that Bolivia has tried and has acted the way places like Chile and Peru have in the last, say, 6 to 12 months or a year or two, in fact. And they've seen that it hasn't worked for them. So they've actually become somewhat considerably more friendly towards the mining sector. And it's also very important for their economy. And so you've got companies, for example, like New Pacific, which has some tremendous silver projects. Again, some anomalies, in fact, in the silver world that I think are very attractive, very interesting to look at. And they are collaborating with Pan American, which has been operating a mine successfully, by the way, in Bolivia for a few decades. And so they have a lot of support and backing, help, et cetera, guidance from Pan American. I think that's going to go a long way to helping New Pacific to move their projects forward. So, there's Australia that has some interesting silver projects. It becomes a little bit more difficult for North Americans, at least to perhaps to invest there. Not impossible, but certainly something to look at. Overall, it's true. Silver projects are much fewer and far between. One of the places that has been, I think, perhaps lately somewhat overlooked is Idaho, for example. Hercules Silver has had huge success with their discovery of silver and now copper porphyry, with Barrick moving in and investing over $20 million of, I hope I have that number right, but I believe it's somewhere around there, and really moving that project forward very quickly. Idaho is, as I say, where their project is a place to look. So there are places. It's a small sector, and like a guy, famous precious metal speculator, likes to say, Doug Casey, when you want to invest in the silver sector, it's so narrow. It's like trying to move the contents of Hoover Dam through a garden hose. And we're certainly starting to see that happen the last couple of weeks with, as you mentioned, you just have to look at some of the ETFs. Their response has been tremendous. I've seen huge moves in some of the juniors. It's really interesting, rewarding to see. And I think we're just at the very beginning. So it is time to start paying attention and to, and I want to sort of maybe say a couple of things here. People don't have to take outsized risks. If you feel more comfortable with some of the larger players, by all means. A couple of examples, and I talk about this in the book with some detail. Pan American Silver was up 16 times between 2001 and 2008. Wheaton Precious Metals, multi-billion-dollar precious metals company, not even a miner, a royalty company, was up 17 times between 2008 and 2011. These are just exceptional, explosive returns that come from some of the largest silver companies, public companies out there. So, if that is any indication of what this sector can do, imagine for a moment what the juniors will do when, people decide that they want a piece of this action. So it is absolutely a place that people should pay attention to. And again, it doesn't have to be all or nothing. You can do your research, look for information, companies that have been vetted, and then do it gradually. You can decide a dollar amount that you want to allocate to a given company and do it gradually over time. It doesn't have to be, if you're putting $1,000 or $5,000 into one name, you don't have to do it all at once. Put in $1,000. Watch it carefully. There's nothing like committing a bit of capital to a new stock than to encourage you to watch that stock like a hawk and see what happens to it on an almost daily basis. I think it's human nature. And then if you see that it's kind of moving in the direction that you like, make a second tranche, make a second allocation to build up your position, and that will help you to mitigate some risk.
Some very cogent points there, Peter, and I appreciate you sharing that because I think a lot of people think they got to go to the riskiest part of the sector right out of the gate and go all in one lump when it's better to spread your bets around. And there, some of the big stocks do move, and you can buy in tranches and always get that starter position, like you say. Once you put some money in it, even if it's just $1,000, you'll know that you're going to watch that stock a lot more closely, and then decide if you want to take a bigger bet on it. Just brings up one last question I want to squeeze in here, and that is during the silver squeeze back in early 2021, we saw some of the biggest companies outperform a lot of the juniors because they were dual listed, because US investors could access those. There are certain trading platforms like Robinhood, Webull, Stash that a lot of the Reddit armies were getting behind, and they couldn't buy the over-the-counter stocks, the OTC stocks, and they didn't realize they could use Interactive Brokers to access the Canadian stocks. So the reality is, when there is a big move in silver, the dual listed stocks get the action. Do you see that changing anytime soon, or do you see that as a factor in the silver space? Because it's a lot more in the silver space than it is even in other commodities where people gravitate to those larger names just because they have access to it in their trading platforms.
No, that's a great point, and I believe that you're right. That does certainly help drive action, and but I think especially early on in these moves, that it will drive action. As I think people get to know and understand the sector better, and which is what I believe. This is not sort of a flash move. I think that this is the beginning of a sustained move, and when I say sustained, I'm talking at least several years. It's not going to be straight up for several years, let's be fair, but it will be a strong move, likely, I think, for several years. That although some of these names, as you say, the dual listed ones will have preference, people will start to pay attention, will ultimately realize that it's a little bit bigger than those few names because there really aren't that many that are listed in the US. And it will start to bleed into these other names and they will certainly benefit from it. But those are great points, absolutely. But that gives you opportunity as well. Because if those names move a little bit later, then you have the chance to get into them before they move, unlike perhaps some of the others.
Yeah, some good thoughts there. So maybe people could even, if they're a little bit less tolerant to risk, maybe they start with some of the bigger ones, but if they get comfortable and if they feel that their footing is there for the silver space, they'd still have time to rotate into some of the juniors before they really blast off. There's just so much more we could cover. I've had a million thoughts in my mind as we were talking here, Peter, but I want to wrap us up with just where people can find you. Where can they find your newsletter? Where can they follow your work?
All right. Well, thanks, Shad. So I think there are two great ways. First is the book that I wrote called The Great Silver Bull. That was published a couple of years ago now, almost a couple of years ago. Still very, very much relevant and getting plenty of attention. That's available on Amazon. So you just need to look up The Great Silver Bull. And really, that is the idea behind that was to give interested investors an overview of the silver space, of the opportunity in silver, how it moves, why it moves, and the potential. So I really do go through, just basically I go through the history of silver. I talk about some macro in terms of how and why silver is and has been important. Talk about the supply demand characteristics, what makes silver different from other investment asset classes, and then ultimately how to invest in silver. So that's a great overview of the opportunity, how to get started in it. And then for what I would call more of a real-time way of tracking what's going on in the silver space is my bi-monthly newsletter called Silver Stock Investor. You can find that at silverstockinvestor.com. And I, have some proprietary research there once a month. I will often either cover a new name that I'm recommending adding to the portfolio or do a deep dive on a company in the portfolio to provide an update on happenings with that company. And I give updates on any pertinent news with all of the holdings in the portfolio. I do some technical analysis of silver charts, US dollar, silver stocks, the silver ETFs, just to get a handle on where the action is and what sort of more near term to expect in terms of price movements. And I have macro thoughts at the beginning of each of those letters to give you an overview of where I think the space is, where it's heading, and just to basically give subscribers, an easy, quick understanding of what's going on, what they need to know about, and what they need to watch. So other than that, people can follow me on Twitter. I'm pretty active. That's at Peter_Krauth, Krauth. And I'm also on LinkedIn at Peter Krauth.
All right. So a couple different choices for people to follow the work. You can take a deep dive in the book, or you can actually get the real-time updates with the newsletter and then follow you on social media. Peter, it's been great having you on the show. I'm sure we'll be having you back on periodically to discuss the silver markets, the silver stocks, and really appreciate you spending some time with us here at the KE Report.
Well, Shad, it's certainly been a pleasure of mine. It's the first time, and I hope the first of many.